So yesterday we talked about the rally happening, and wow, yesterday the rally definitely continued. A lot of my stocks were doing very well yesterday, and the account looked very healthy yesterday. The market itself, a lot of the indexes were actually a little bit flat, but a lot of my stocks were rallying up yesterday, and it was really good to see some gains really coming in. And even today, a few stocks are making a few moves, and we'll talk about them today. So yeah, once again, I thought I'd cover a variety of topics, a variety of stocks. I know you guys like this when I spend 3 or 4 minutes kind of just updating what's kind of going on with this company. So we'll get started. So first of all, DraftKings has had a fantastic time. It's nearly $21. It's broken the $20 range, and you can see yesterday the stock was up 7%, and you can see here in the last 5 days it's up 9%, and in the last month it's up 21%. So why is DraftKings rallying? Well, obviously this is just day-to-day fluctuations, but there's a little bit of reason behind the rally. So first of all, analysts have been getting a little bit more bullish on DraftKings recently. A lot of them have been saying that they are on the way to profitability. I mean, obviously for us guys that have been following, or if you have been following the stock for the last 12-24 months, you know, you've always seen the profitability. It's just that now realistically analysts have kind of gone, oh look, they are getting closer to profitability, the losses are coming down, the margins are improving, or all these states are turning profitable now, they are going to make profitability. Oh, look at all the other companies that are making profit. It's just how long sometimes analysts can sleep on positions and then all of a sudden turn around and going, actually we should be buying that one, and you get them sharp jumps out of nowhere. And once again, it's just that DraftKings has been slept on, and all of a sudden they've realised, oh, they are going to make profitability soon. So yeah, there's been a few people coming out saying that, or analysts coming out and saying that, you can see here noting that the new state launches keep getting better for the Boston-based company. Strong starts in Ohio and Massachusetts as well. And you can see here Morgan Stanley believes DraftKings will achieve its first quarter of positive EBITDA this year, which they've been saying for like 2 years that they're going to get it in Q4. I think they potentially could sneak it in Q3, but we'll see what happens. And also they said that they could see potentially them hitting profitability in 2024 as well. So yeah, there's been a bit of analysts getting a bit more bullish on DraftKings. Also, Entain. Some of you guys might own Entain, but this has been having a good time recently. Stock is up 8%. This comes off Entain bringing out really good earnings, and also saying that the Super Bowl was really strong. So obviously people are thinking, well, DraftKings have their Q1 earnings with the Super Bowl in on the 4th of May. So people getting excited looking at Entain's numbers and seeing the shares rally, and that's caused DraftKings to do really well. So yeah, that's mainly the reason why DraftKings have been doing well. That's obviously caused by Entain, and also this has led to Flutter, another stock that I own on the UK side of it. The combination of all these stocks really doing really well because of how hot the sector is, and Flutter's performed amazing. And you can see in the last 6 months, the stock's up 47%. I think I'm up like 30-something% since buying. So this stock has been doing really well. And I saw the other day someone was like really negative on Flutter, and I was like, how can you be negative on this company? Like, you look at the FanDuel and the other business models that have, the more mature business models they have, it's a fantastic company. So yeah, really good from that point of view. Next one, Netflix. So Netflix brought earnings out, and there was a crazy move after hours. I don't know if you saw it, but the stock actually dropped, you see here, 8% in after hours, and then very quickly it recovered the 8% drop, and people bought in, and basically it's probably down in pre-market because it looks like we're going to have a red day, and that makes sense after so many green days. But yeah, really strange move from Netflix. Don't really follow the company close enough to kind of comment on their earnings too much, but the earnings looked okay. So maybe it was just a bit of people originally panicking a little bit because if you have been buying since summertime, obviously a lot of people are up on it, and maybe there's a bit of profit taking going on, but something to keep an eye on there. EasyJet, don't know if you saw EasyJet, but they had a bit of a rally the other day because of their earnings. They came out and said that travel demand is very popular. They said that summer bookings have been really good, and also they said that even though the French strikes have been happening, there was still positive travel, especially around Easter time. I can agree. I travelled at Easter. I went to France actually at Easter time, and there was definitely no slowdown of people travelling to France at Easter, even with what was going on. And also, it was very busy as well. So 100% the travel at the moment still seems very strong, even in this spending crisis that's kind of going on. And that is obviously really positive for a lot of travel stocks, and a travel stock that I own like Jet2, a stock that I've owned since the CV times, a stock that I'm up over, I think it's something like 70%, and that's with a lot of averaging up as well. So yeah, hopefully Jet2 put in some good numbers as well, so we'll keep an eye on them. Next one, National Express. So National Express as at the moment, it's having a very good day. The stock is up 5%, and this comes out after they brought a trading update out. They brought the trading update out, and it was very good. You can see here, National Express sees revenue rise despite driver strike, and they brought out earnings. The earnings didn't really seem to be affected so much. Everything was moving up in the right direction, and basically what we've been covering on the channel for a while is like this company has been executing so well, and financially the demand is still there, and it's good to see a pop up today. But realistically, you still look at this stock going, it's having this pop. It had a pop up when we won the 1 billion German rail contract. It's having a pop up off really strong earnings again today. Like realistically, this company's performing so well financially, but then you look at the share price and it's still very much near 52-week lows, and it just doesn't make sense. There's a massive disconnect going on where this company keeps bringing out really good earnings, but yet the share price is sitting at 52-week lows. And you're looking at this stock that was a £4 stock pre-pandemic. It was a stock that in 2021 got to £3, and yet all this positive information is coming out and it's sitting at £1.20, and it's just crazy how low this stock has been beaten down to. So yeah, I mean, a good update today, but realistically we should be talking about this stock above £2. So I think it's a matter of time before that happens. Cakebox is also up 5% today, nearly 6% up today. They brought out a trading update. Once again, really, really good trading update from Cakebox. They have seen improved trading, and they said that they had a 5% revenue growth. They also opened up a lot of new stores, and also they've seen margins improve because freight rates have been coming down. There's been a lot of companies that have been saying that margins have been doing quite well because of the freight rates coming down. Cakebox, I don't think it was. I always said for Cakebox, they only need to bring out 4% revenue growth, 5% revenue growth, and that's what we're happy with. It's not going to take much for the share price to pop because of how low it's valued. 10 times earnings, 6% dividend yield, amazing balance sheet. So it was only a matter of time before this company had a bit of a pop up on the share price because it's just valued so low, and if it brings these earnings out, it's obviously going to help massively. So good earnings from them, and the great thing as well is like, this is in like this recessionary environment. Like this is when a time that Cakebox was supposed to show weakness. This is a time where you'd think a more higher end kind of cake business like this would suffer a little bit. You would see the slowdown, and obviously there was a little bit of a profit warning in summertime, and that's what absolutely devastated the share price. If you look at since that profit warning, and the stock was nearly around about £2, the stock lost nearly half its value off that profit warning originally. And it's like, well, since that profit warning, the company has recovered financially, but yet once again you're near close to say 52-week lows, and once again, both examples of stocks that have been performing so well financially, and they've brought out trading updates, and it's good to see a pop today, but realistically they're still way below where they should be. So good to see a good trading update, but I still feel like, if anything, this is a massively undervalued stock anyway. And I saw that there was an interview on Fox Markets as well with the CEO, so I'll have a listen later and see what he had to say about the business and how it's all going. And after I listen to it, I'll probably do a little bit of an update. You guys on the page will know I'll do an earnings review, and I'll have a bit more information from that update from there, and we'll see what's going on and dig into these earnings a little bit more. And last piece of news that came out today was inflation. So the inflation data came out for the UK. Obviously the US is a little bit ahead than the UK, and I've got more confidence on the US inflation to drop rapidly than the UK inflation. UK inflation has been lagging, and obviously one of the big reasons why UK inflation was up so much was food prices. We've seen food prices go up quite a bit. We've also seen shortages of items as well recently, so I'm sure you've probably seen like peppers are like gold dust at the moment. They keep going absolutely crazy, and obviously prices are going up as well. And I always thought, like, I think it was a while ago that the Chancellor came out, Jeremy Hunt, and said, like, I think they're expecting to get inflation back down to the 2% or something, or 3% by the end of the year. I was like, I don't think they can do it. Like, I have confidence the US can do it, but the UK, I always thought the one worry is that the inflation won't come down as rapidly in the UK. And obviously this has dragged down on the markets a little bit today, and maybe if it wasn't for this, we would have seen the likes of National Express up a lot more today, and we might have seen Cakebox a lot more up today if it wasn't for a red day. But obviously this is causing a little bit of redness. It might be actually the root cause of why the US is down a little bit as well today. But yeah, I mean, overall, like I always thought like the inflation will lag a lot more in the UK, just because we're just terrible at managing these sort of situations. You know, you only have to look at the energy crisis. You know, you look at the wholesale gas prices and the back down to levels that we were pre-Ukraine levels, but yet we're still playing the sky high prices. And you know, there's always the understanding of that. Obviously, the gas prices are lagging, but it's just crazy, like how much the lag, even though there's been the rapid drop. And it's things like the price at the pump as well. In the UK, you know, you go to the pump and you're still paying, you know, £1.45, £1.50 for unleaded, and you're looking and thinking, well, if you look at the oil prices are back down to before the Ukraine situation. And before the Ukraine situation, what were we paying at the pump then? You know, I would say probably £1.20-ish for where I live, probably £1.20 for unleaded. So you're talking nearly, oil or petrol at the pump was 20% cheaper before Ukraine. The oil prices have come down, but yet it's not reflected in the pump, and it just shows you, like, as an economy, as a UK economy, we're just so badly managed. Like, we're so badly managed where there's not any, we don't have a lot of our own energy supplies. We don't manage our energy supplies. We don't regulate our energy supplies really well. And no wonder we absolutely get ripped off as a nation, and we pay absolutely sky high prices because we don't generate enough of our own stuff, and we don't regulate. There's not enough regulation in the space to make sure that we're actually paying a fair price. And a lot of these companies aren't benefiting from keeping these higher prices up when for them the prices have dropped and they make a lot more money, you know. And they have to look at some of the profit that Shell and BP were putting in, especially from the UK side of it not so long ago. So yeah, I mean, looking at the UK side of it, inflation I always thought was an issue, and when the Chancellor came out and said that we were going to come down to 2% by the end of the year, I was like, I don't think we can do that in the UK. US can do it, but I don't know about the UK. So yeah, obviously some lagging. Obviously it did come down, but not we were supposed to be in single digits, not double digits this time round. So yeah, obviously not a good issue there at the moment on the inflation side of it, but I think that was expected, to be honest with you. So yeah, that's just a quick recap of things that have been going on. DraftKings, Entain, Flutter, Netflix, EasyJet, Jet2, National Express, Cakebox. Quite a few companies quickly covered in today's video. So I hope you enjoyed it anyway. And as always, if you can smash the like button, that's absolutely amazing. And I'll catch you in a bit.